Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and today we're going to be talking about early stage and seed investments. This is an area of concentration where we see the majority of venture capital money still entering into the startup space. But what is all happening? Where are the opportunities? Where are things being shied away from? What is being put into the spotlight? And what do you need to know as either an investor or as an entrepreneur to thrive in these areas? Well, that's exactly what we're going to be talking about today on this show here at VCTV. But first, a big thank you to you, our audience, for tuning in. If you're liking what you hear, make sure you click subscribe and also check out the archive to hear from not just today's speakers, but the entire the VCTV family of speakers as well on LATOKEN.com. And a big thank you to the LATOKEN team, to Hasmik and to Maria for making VCTV possible every single day. As again, I'm your host, Kyle Ellicott. We're going to jump right in to today's discussion because it's, again, an important topic that we're all paying a lot of attention to, but also we have an early stage company joining us here on VCTV to actually pitch their company to us and showcase what they're doing. So I'd like to welcome up Ryan of Study Space to share his company with us as investors. He'll have 5 minutes on the clock to actually pitch his company, and then we'll give him some feedback and we'll jump right into where things are in the early stage and, again, seed investment space. So Ryan, if you're ready, the clock is yours. Oh, Ryan, you're on mute. Hey, Ryan, real quick, I want to pause you. There, you're on mute. Okay, can you hear us?
Yeah. You hear me? Fine.
All right, yes. There you go. It's all you. Go ahead.
Okay, thanks again for having me and welcome. So this is Study Space, a digital community for education. So what is Study Space? This is a digital education platform that provides support for students, teachers, and parents in emerging markets. The problem? So some of the problems that students face: a lack of internet access and devices, lack of socialization and motivation, lack of supervision and accountability, and a lack of appropriate learning mediums. Some of the solutions that Study Space provides: tailored curriculum content, AI-assisted exercise recommendations based on topic strength and weakness, incentive-based learning, one-on-one online tutoring sessions, digital tools, and an online peer support community. The second stakeholder, parents, some of the problems that they face: difficulty supervising and tracking progress, limited access to their children's academic schedules, differing education levels affecting their ability to teach and support their kids, and a lack of support and solutions that this provides: digital progress reports, digital academic schedules, digital support training and tutorials, and program-specific online solutions. Thirdly, teachers and some of the problems they are facing: adapting to teaching online and feeling prepared, effective presentation skills, virtually disciplining students, and understanding how to fully utilize digital platforms. And lastly, a lack of support and digital training. Study Space's solutions: AI-assisted exercise recommendations based on topic strength and weakness, streamlined progress tracking, digital support training and tutorials, virtual disciplinary features, additional income stream through the online tutoring portal. And then in our country, the Ministry of Education's problems: teachers' resistance to change, tracking problems and progress across all stakeholders, providing centralized access to and delivery of educational material for all students. The solutions we provide: provision of sufficient support through tutorials and training for stakeholders, cohesive learning platform for all stakeholders, provision of live schooling and repairable content for students, and access to detailed data insights on stakeholder usage. So here's our solution roadmap. Firstly, devices, which our country, and I guess countries are trying to address right now, because not all students have access to devices. Secondly, connectivity. Thirdly, the willingness and capability of these stakeholders to be involved in this conversation. Then replayable and interactive content so that students can access the content at any given time. Accountability and data to ensure students are doing the work and they have the support through their parents and teachers. Then the support and feedback in the event we have any problems. And finally, the data analysis and development. How are things going? What are the strengths and weaknesses of the platform and the users? And how can we improve? Currently, in the Caribbean market, we have 7 major digital education providers. And through our research, we have found specific ways in which we could differentiate ourselves and add more value to the market and meet these users' needs. So how is StudySpace differentiating itself? Firstly, providing curriculum-specific content. For example, for primary school students in the Caribbean to go to secondary school, they do the SEA exam. So we'll provide SEA content for primary school students. And in any emerging market that we step into, that's the same approach we're going to take, ensuring that we have the curriculum on the platform primarily. Continuously updating quizzes. So students, they usually do testing, of course, of quizzes to prepare themselves for exams, but they usually run into roadblocks, especially in our market, in only having access to past papers or what's in the book or what the teachers give them. And we want to solve a problem there in providing them with additional quizzes to ensure that they're properly prepared. Incentive-based learning, so partnering with the businesses in our region to provide students with iPhones, iPads, movie tickets, and so on to encourage them to come back on the platform, consequently ensuring that they are properly educated. Utilizing artificial intelligence to consistently adapt to each user's profile, so giving them recommendations based on their strengths and weaknesses to ensure that they're prepared. Content that is interactive and gamified, so we know that students being in front of a screen for so long, especially when they're not too enthused about studying, they get disengaged, right? So making sure that the material is interactive, animated, and a bit more fun and relatable for students.
30 seconds, Ryan.
Okay. And finally, providing support for all stakeholders. Our revenue model, B2C, student subscriptions, our goal of 20,000 students at $15 USD a month. Teachers, tutoring subscriptions, parent subscriptions at $3 USD, and sponsorship and advertising grant funding. B2B, developing tailored solutions for schools. Our opportunities to scale after establishing ourselves in the Caribbean, stepping into other emerging markets like India and Africa, and expanding our functionality based on users' needs. And the future of StudySpace, having study spaces where students could go to these facilities to study, having support centers that are 24/7, and then career pathing, having an alumni of students that have come through the StudySpace platform and supporting upcoming students on their future pathing.
All right, five. Just wrapping up right here, Ryan. We're over time. Yep.
Finally, this is our team. So Ryan Augustine, myself, and Daniel Francis, who created the platform, and 4 of us are high school friends who are working together to build StudySpace. And we're 6 to 8 weeks to finishing developing the platform, and hope you enjoy it. Thank you.
Wonderful. Thank you very much, Brian. And also we're joined by Darnell, one of your co-founders, as you showed us on your team. Very much appreciate you guys joining. And then also it takes a lot to get up on a virtual or a physical stage and share what you've built. So thank you very much. Peter, let's start with you. Any feedback and or questions for Ryan or Darnell on their company, StudySpace? Oh, Peter, real quick, you are muted. Everyone on as the speakers today, make sure you check the mute button as well.
Ryan, Darnell, I thought it was a very good presentation. It was very concise. I saw exactly what you are, what the business is about. What I didn't really take away from right at the start, again, at the start, is what's the ask? Meaning, what's the value of the company and how much money you're looking for? And what am I getting for that? I'd like to see that right in like the first or second page of the presentation.
Okay. Yeah, so what is it? Yeah, can you address
Ryan Ryan and Darnell, remember there's a delay. So 1, 2, what is the ask? What are you looking for from investors today, whether they're listening or here on the panel? What is the ask for the company?
Well, the ask really is to complete the roadmap to launch, we'll need about 50,000 US. So that's like pre-seed funding just to get us to launch. And that could get you anywhere between, the exact figure will be 3.73% of the company at the current valuation. Mm-hmm. However, we'll be open to negotiation as is negotiable. And once we get that launch off the ground, we get some customers, we'll like another round of funding. But at that point, we'll have proven the capability of the platform and whatnot, so we could get a bigger seed round raise.
And then I'll just ask you, so what will that take you to in terms of that $50,000? What will that take you from now to after that capital is deployed? In terms, do you see that in more of a working capital or an immediate uplift to the company's valuation or combination thereof?
That is for launch. That's just to get a completed product into the market. We'll use our resources to get into our ministries and government. Due to the easy nature of the subscription-based model with the students, as a need-based company, as you know, the first couple of months of adoption by students, that will give us working capital. However, in an ideal scenario, if we get something like 250K US, and that will take it upwards of about 10% of the company, that will ensure runway, that will ensure working capital, that will ensure a marketing budget that could be elaborate with our animators and whatnot. So that's the two options. So we have a bootstrap, almost, a low level MVP investment, and then we have a 250K that take us beyond a year of runway, because our expenses are low, and we have a document that we can share with you with the valuation, the expenses, and everything done. We just wasn't sure if to cram it into the deck. So thanks for the pointer. We'll do that for our next pitch. We'll make sure and have that slide in there. But yeah, that's really it.
Thank you, Peter and Darnell. Raghu, real quick, any feedback or questions for Darnell and Ryan?
Sure. I think, I understand the technology platform is one aspect. What about the content? How are you planning to create that? Is that going to be licensed, or you're going to be creating your own content?
Ryan, you can answer that question. Go ahead.
Yeah, so two things. So primarily, the past papers that come from these specific curriculum that come from this board called CXC, they provide you with access to that content. And outside of the past paper content for the quizzes, we would be creating our own content for the quizzes that we're getting teachers to create. And then we make animated content, which is why Dan would have mentioned the animators to create the content in relation to the other subjects. Yeah.
Thank you, Raghu. Mark, I know you joined just a minute or two when the presentation started. There was an internet issue on our side, so apologies for that. But real quick, any feedback or questions for Darnell and Ryan? Oh, Mark, we're unable to hear you there. Oh, it's okay. No worries. If you type it in the chat, I'll read it for you, but no stress. Gary, any feedback or questions? And you're muted. There you go.
Yeah, sure. Yeah, so a couple things. One is you got to do your math, right? So it's 50,000 for 3% and 250,000 for 10. There's something wrong with that picture. So make sure that you get your math lined up, because it doesn't look good. But I mean, I think what you have, and I don't know the market in terms of the entire educational market today, but in terms of hyper personalization and what you're doing could be applied anywhere, it would seem. So I would look at, not just the developing countries, but everywhere. And now's the time to get out as fast as you can. The next part of the question, have you done customer development? Have you gone out and talked to people that said they're going to buy it? They're actually interested in, talk to 100 different, schools or individuals. Have they said they're going to buy it?
Yeah, we actually have buy-in from the principal association in the country. There's a junior elementary school and high school. They want to adopt it in their schools as soon as it's completed. So we have a play testing ground, and we also have them. They will kind of make it almost mandatory, not forcefully, but for the parents to adopt this. So having them as our almost on the ground marketers, it bodes well for us.
So I would get a letter of intent or something, an MOU or something that just says that that's the case, right? And then exactly line out what does that mean. So
Okay.
because it's, the deal with these early stage investment, there's a lot of risk with it. And what kind of AI? Tell me about the artificial intelligence. Exactly what is it?
Ryan, you can answer that part.
Yeah. So the data is just pulling the points of the specific strengths and weaknesses of students in these specific topics. I'm not very versed in the data side. We have a data analyst who will answer those questions, I guess, more in detail. But the point is to really pull out these strengths and weaknesses of specific students based on the subject, right? And we get that from the teachers that are providing us with the information based on.
Is that AI or is that algorithmic math? I mean, what do you? So I would really clarify what you have, because a lot of times people misuse it, and you don't want to get somebody that really pins you down. That says, "Listen, this isn't really unsupervised or semi-supervised AI. This is really, some." And it happens a lot, right? But make sure because the beauty of the system, right? If you can actually understand what somebody's learning and their strengths and weaknesses, and then start to predict what they need to learn, that becomes really interesting, because that's one of the big dilemmas. And Kyle and I have talked about that. We all have actually been on panels and talked about it. So that's where it starts to become interesting. But you need to get out as fast as you can. Has you met with Telly? Do you know Telly?
No.
We'll make the connection. So real quick, I want to make sure I get Mark's question, and thank you, Gary. So we have a wonderful, outstanding investor here at the VCTV family. Her name is Telly. She's based in the Caribbean as well, and she would be an outstanding person for you to talk to, because she also focuses on education and fintech as well, and the future of those. So we'll make that connection as I circle everybody up afterwards. So thank you, Gary. And also, Gary's mentioned on artificial intelligence. It's good for you both to know he is a very prominent investor in the space. So when he pushes that to you, it's him as an investor saying he knows the difference between one versus the other. So definitely take note. And Mark did give some feedback. It said, good presentation, great space to be focused in, but you may want to look at your ask. In terms of the amount of capital you're looking to ask for, you're going to need to push that up. It's going to take a lot more capital than you may think now to get started and to get to your next milestones. That's one. Two, that there's a lot of work happening in this area around education technology, or ed tech. And there's been a lot of progress in the industry over the last year because of the forced migration we've all had to make. However, that also gives an opportunity for individuals like you to be a system integrator into an existing platform or an existing ecosystem, such as Microsoft or some of the others that are exploding throughout Southeast Asia and here in the United States and everywhere, really. So that was Mark's feedback. He was having an audio issue. Apologies. Oh, he's there.
You can hear me now? Perfect. You framed it fantastic, Kyle. Good. The microphone works, but you framed it correctly.
Like one mind.
Having 4 kids all going to the online education for the last year in all kinds of different capacities, we have seen them all. I thought we would have seen them all, the tools, but there's so many others happening right now. So lots of opportunity, but as I think Kyle, as I said, and Ryan and Danielle, you're focusing on the right space. But I would say build on the things that are already there. Your roadmap identified all of the issues. One company solving all of them, not even if you're Microsoft. It's not happening. So you really have to look at the whole picture, pick the best of breed, pick a couple of them, build them together, and deliver the content to the students.
Thanks a lot, Mark.
Okay,
absolutely. So Ryan, Darnell, we're at time. So thank you, Raghu, Gary, Peter, and Mark. And again, Ryan, Darnell, I will make sure you're all connected afterwards with the team. So do not worry. But before we do go, real quick, Darnell and or Ryan, where is the website that everybody can go to hear more about Study Space? What is the website?
Could we drop the link? It's studyspace.webflow.io. Studyspace.webflow.io. We could drop the link.
Yeah, please share it in the chat, and to our audience, make sure you check out Ryan and Darnell along with Study Space as well online. And thank you both for joining us today. Now switching gears into today's topic. Investors, quick introductions around the table as I come to you for your first question of the day, since we are having this split episode. Early stage, venture capital, seed. What is happening? I've got a few big questions that's movements in the industry, but would love to just get your general thoughts of where the industry is from your standpoint as investors? And Peter, I know you focus more on the later stage, but would love to still hear your thoughts on the early stage as it moves in. So Mark, let's kick it off with you if your mic is still ready.
You tell me.
There you go. Short intro, just in case we lose it. Short intro. What is the current state of early stage and seed investing from your standpoint?
Gladly. Mark Müller-Eberstein, born in Germany, living near Seattle, a member of the Alliance of Angels, of the ACA, of Swan Fund, and a bunch of other investor group and advisor funds. Doing angel investment for about 10 years now in a wide variety of companies. Background, though, is in the tech space. So I have a big heart for anything that has to do with technology and of course, with education, of course, as well. So I really like this, people focusing in that space. What we have seen over the last year, a lot of momentum and a lot of transformation for sure. While we expected when COVID started that everybody would freeze up and money would be tight, completely the opposite happened, especially over the last 6 months. There is a lot of capital available looking to be deployed in the startup space, looking at the right entrepreneurs. And while the global opportunity has really come to bear, so both for providing capital, but also for raising capital. So entrepreneurs now have a global stage to ask and to reach out and build relationships, but it also means they have global competition. So right from the start on, it's very, very difficult to just focus on the local space. You really have to see what's happening around the world. And Kai-Fu Lee put it quite interestingly, depending how different countries are dealing with the transformation over the last years and where people put their money, you'll see education exploding in China because 25% of the normal salary is invested into their kids' education, while in the US, the remote work has taken off completely. So really, depending which space you're looking in, you see innovation happening in different corners of the world, but it's all coming together. And why not in the Caribbean, for example, taking the best of the breed?
You're on mute.
You're muted.
Sorry. Yeah, we all do it. I called Mark out about it earlier. It's happened to me twice. Last show and this show. My apologies, everybody. Mark, I think you're perfectly right. It's happening everywhere and also in these transformative markets where traditionally there hadn't been investment capital going into the region and now there is. So it's exciting to see. And Gary, I want to come to you next on this quick intro and then a little background. So what's happening in early stage venture? You've also got a fund focused on this area now as well. So talk to us a little bit about it.
Yeah, so my name's Gary Fowler, and I'm a serial entrepreneur and investor. I've done 17 companies, 2 startups that achieved unicorn status. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion, and also Eva.ai, which is one of the top 10 AI HR tech companies. Recently started working in the Bitcoin arena. In fact, some big announcements going to happen with Miami in the next couple of days. And in terms of, I started the first accelerator in Russia. I've had several thousand companies through my accelerator, and also started the #1 private corporate accelerator. Today, I'm the CEO, co-founder, and president of GSD Get Shit Done Venture Studios, where we curate companies from around the world and help them go global using Silicon Valley as support. So we do take operational roles in the companies, and I love AI and quantum, as you know.
Yep. Well, and going back, Gary, towards the question around early stage investment, you have a $100 million fund. You are very focused on now this early stage. What are you seeing happening in terms of the early stage investment scene from your standpoint, having just raised a fund as an investor?
Yeah, I mean, the situation is a couple of things. One is the democratization of opportunity. I mean, we have companies in Africa today. We have companies in Indonesia, literally all over the world, Russia. But it's really changed because we're seeing artificial intelligence companies from everywhere. So in terms of investing, it's really spread out. The other thing is, as Peter knows, which he's with the family offices, that the family offices are a lot more active than they ever were before. And really getting hands-on, looking at these incredible companies that are going to, put a dent in the universe. So whether that's in supply chain, whether that's in manufacturing, in all kinds of different ways. But ones that'll have an impact. So I see the early stage. The one thing that's really critically important today is if the companies have some sort of revenue, can prove that their model is going to work. Because if not, it's harder. Not saying it's impossible, but it's a lot harder. And the other thing is, it's just like today when we're talking about the investment, make sure your numbers add up. Because as soon as Raghu heard that, he's and Peter and Mark, as soon as I hear that the numbers don't add up, 150 I get 9, 250 I get 10. What's wrong with that picture? So you got to go down through and just, you got to make sure that everything lines up, or you lose credibility, because all the investors, every time we're looking at where there are holes in the system so we can, understand whether it's real or not. So I like what they had to say. If today with the startup today, if just from what they had to say, I'd say it's a winner. The question is now you got to look under the hood. It's like having a Ferrari and putting on the racetrack and forgetting the engine's in it. That's not in it, right? And so we just want to look. But so team's important. Positive attitude's important. The investors are more globally spread out today. So I've raised money from China, from Israel, all over the world, actually. So it's everywhere. It's a matter of access to it. And that's why VCTV is so great.
Thank you. Thank you very much, Gary. And Raghu, I want to come to you as well. I mean, you're looking at early stage companies as an angel investor. What have you seen really transform the industry, or what has transformed in the industry over the last year to where we are today?
I think the biggest thing that's happened is the pandemic has accelerated technology, right? As Peter Diamandis says, technology as an enabler to abundance. So that's happened, forced everybody to accept technology. I think that's the big thing. So, technology, I'm interested in tech companies, especially decentralized opportunities, decentralized cybersecurity, decentralized finance, decentralized carbon solutions, because we're all connected. We need to have multiple places, where things are happening, and that trend with globalization is happening as well. So I think it's a big opportunity, as I think Mark was saying. Now there's a global stage for companies and global capital. There's a lot of alternative capital available in addition to the angels and family offices for early stage. There's also these what I would call leverage opportunities, where if you can raise a small amount, you can have some of these alternative funds that are willing to come in at 2080 or 1090 type of things. But it needs a very strong team. I think the team is very important. The plan is important. Of course, the execution is the final thing. I look for de-risked opportunities where the team is great and they have a very good plan and they have an MVP. So the kind of early stage risk in terms of discovery or kind of figuring out the idea is already passed. So they have some customer traction and a product already in place.
Yeah, customer traction would be wonderful. It's just to see the validation, I think, from people really willing to engage and to pay for it at one point in time, or if you see the value in it, I think that's really important. And I think the other point Raghu mentioned is the USP. So what is the unique value of that particular team? And are they leveraging all the things that are out there? I mean, I try to make these, I've been investing long enough to remember when, if you wanted to build a tech startup, you had to build your own data center and needed millions of dollars just to buy servers and equipment and everything else. And today you pick up a credit card, sign an AWS or Azure subscription, and you're up and going with a couple of $100. So leverage what's already out there and build on top of it, build your USP on top of that.
Well, and traction's a good point. And I'm going to, one thing I want to touch on there is traction, specifically from the last year. Traction is good, but can you continue the transaction or traction? Where did the traction come from, right? When you're starting to see spikes, especially over in 2020, there were a lot of companies that hadn't seen the type of traction that they got during that year in years previous. So the question is it sustainable in 2021 or was it just a blip? And that's something that entrepreneurs that are paying attention to, you need to be able to answer. And investors, you need to ask. Something to stay clear on. Also, Peter, thank you, Mark and Raghu. Peter, real quick, same question to you, maybe also a short intro, but then also from the family office perspective, how are you seeing things kind of shift if you are looking at early stage or just in general? But first an intro and then the question.
Yeah, so Peter Plout, Executive Director of the Weimer Family Office. I also have a joint venture with the Fortress Credit Opportunities Funds. They're a large private equity fund. At the family office, we have tens of billions of dollars in liquid capital, various asset classes that we look at. I would say early stage seed is probably not for a family office, as Gary mentioned. What's important to us is seeing a path to cash flow and revenues. So that's going to be important, because you got to look at a family office is protecting the wealth and the multi-generational wealth of both the founders of the family office and then obviously the generations going forward. So we're more like bond investors. We want our principal back and a nice return for the risk that we take. So we'd be less into the seed round and more for subsequent after that. I'll tell you some of the areas that family offices have been much more involved in over the last 2 years has clearly been in cryptocurrencies, in AI, technology that will change the way people do things, and not just the way, office environments, carbon neutrality, if it's office buildings, ESG compliant technology around care homes and stuff like that. So family offices are all about diversity and impact investing, very important to them. If not directly in terms of the actual investments, then obviously, though, important to the philanthropic activities of the individual families. So that's the best I would say there. Most important thing for us is, as the previous discussion we had, great thing. Education is something important, particularly in developing countries, as Gary would know, around the world, something that we're obviously very interested in. But there's got to be a path to cash flow and free cash flow in particular.
Thank you very much, Peter. And kind of switching gears, I want to talk about valuations. Valuations has always been one of those topics when it comes to early stage that they're either right on the sweet spot or they're really high or just a few slip in between. So in terms of valuations, right now as we hit 2021, there's a few industries that have really taken off, or many industries from last year. How are you all seeing valuations today? Are you seeing these valuations higher and in some cases inflated, or are valuations of most early stage deals on a general scale right about in their sweet spot as to where they should be as well? And some valuations, for those that are listening out there, typically at a seed stage, they can go anywhere from, especially at early, 1 million all the way up to around 10 million if they're doing a capped note, and depending on where the company is. However, today we're starting to see companies well above that. So Raghu, I see you shaking your head, and Mark, I saw you smirk, so I'll come to you next. But Raghu, valuations of early stage companies, how are you seeing this? What do you feel about where they're at today?
I think especially at the seed stage, it's very important not to kind of overdo your expectations. I think you kind of, the early money is very, very important to get the smart investor with you. So I think you need to look for the right investor and be flexible on valuations. And I don't think that has changed a whole lot. Maybe for seed stage, and especially if you already have some traction, both on the customer side and you've already raised some money, it's a lot easier to move forward than if you're really starting out from scratch, right? And obviously the experience of the team matters a lot. I think early stage more, once you have got traction, I think then you can tailor your valuation a little bit better. I usually see safes which kind of punt on the valuation and give a discount, so you don't have to try and value it, but there is still a valuation cap or something that you have to have. So that the investor has some comfort that at least the floor of where they will convert in case the price round doesn't happen. So I think that's a good way to do it. So leave the for the early investors to do like just a safe. So you tie it to a price round where a more institutional investor or somebody who can do more due diligence comes in, who can price it better.
Mm-hmm. Absolutely. Thank you, Raghu. Mark, same question to you. And having run an angel group, being an angel investor, I mean, you're seeing valuations probably all over the place. What are your thoughts on that?
Absolutely. I think it's a key for entrepreneurs to understand the investors are doing this to make money. So they need to be able to see very clearly, what's my exit? When do I get paid at the end of the day, most likely? And what's my multiples? Depending what kind of investor you're talking to, they have different investment models. If you're talking to a VC, they need to be confident in at least a 3x return of their money. As an angel investors, because the risks are so much higher, we need to look and see, is there a 10x return possible? So if a company raises a 5 million valuation, will they be selling, or will there be a liquidity event for the investors at $50+ million? If that's not feasible, then we wish all the very best to the entrepreneurs, but we can't make it as an investment thesis. It just doesn't work for us. So being clear of who you're talking to and what kind of multiples are necessary for the investor to make a positive decision is really, really important. And then being realistic, I said, being realistic of what a company can be worth, but also what the investors could benefit, and look for investors that are not only providing money, but ideally can help and open doors, especially in the angel space, but also the VC space. If you find the right partners, so much guidance, so much doors will be open for you. That's far beyond just the capital. So use those opportunities wisely when you can.
Thank you, Mark. And as we come to close here, Gary, Peter, Mark, Raghu, I want to come to you for your closing thoughts, but also one particular industry. And Gary, you can't use AI. Someone else can, but you cannot. One particular industry at the early stage level that is something to pay attention to for 2021 in your eyes. And again, Gary can't use AI. Mark, you can't use blockchain. Raghu, you cannot use bio, and then or security. And Peter, you can't use real estate. So with that in mind, Raghu, your closing thoughts and one industry that people should be paying attention to that's not been mentioned.
Okay, I will. It's a allied industry to security is privacy. Yeah, I think data privacy is actually not getting the attention it needs. Everybody talks when they say security is about protection and all that, but data privacy, which is a different aspect of privacy, I think is going to be very, very important, and is going to get a lot of capital because there is compliance that is coming in. Europe is already pretty hot on it, and the US is now just starting out. So I would look at that very carefully, the data privacy aspect. And I think, this is an exciting year. There's a lot of capital available. I think it needs people to be reasonable, get the right advisory boards. My main tip would be to bring in the right advisory board that can help you scale. You need a good team, but the advisors are very important for you to be able to learn in a non-linear way. Otherwise, you'll be learning only from your own experiences. So the advisors can help you with that, widening your experience base.
Wonderful. Thank you, Raghu. And where can everyone find you online to continue the conversation?
Best way to reach me is on LinkedIn at Raghu S. Rao. Thank you.
Thank you. Peter, same question. Closing thoughts, one industry, and where can everyone find you?
First of all, I think the most important industry, given the lockdown and the likely continued lockdown, is going to be AI as it relates to education over the next several years. And that's a good follow-up from the conversation that we just had, and also talks a bit too about what Gary's doing globally. I think there's so much technology that needs to take place around education, and there'll be a lot of money to be made there. It's something that's interesting to not just the family offices, but institutional investors, accredited investors, etc. So that's the space that I would point to. Where could I be found? I could be found at the Weimer Family Office, peterplout.com, LinkedIn, Facebook, etc.
Thank you very much, Peter. Gary, to you, same question. Closing thought, industry, and where can you be found?
Yeah, so we haven't paid enough attention to cybersecurity. So these decentralized models that are going to be able to thwart these quantum computers that are coming, the rise of quantum computers, which is happening today. And I believe some of the attacks that have already happened are just tests that are being done on grids, etc. So we need to make sure that we're secure. We need to have systems that will quantum proof in a very strong way our infrastructural across the board, because the data's all around us. So decentralized cybersecurity systems are going to be the wave of the future.
Thank you, Gary. And where can everyone find you online?
You can find me, Gary Fowler, on LinkedIn. You can find me on Twitter. I'd be happy to talk to you, and you can check out my shows. I got the mayor of Miami Beach on Thursday, and Indonesia. I got Samsung from Indonesia's R&D lab, and also one of the family offices. So check it out.
Thank you. Thank you very much, Gary. Mark, close us out. Closing thought, industry, and where can you be found?
Absolutely, gladly. So first of all, just +1 for privacy, for security, for education. Absolutely right, spot on. In addition to that, I would look for things like decentralized collaboration tools, how people get to work together on a global scale. And in the medical field, I think what we're seeing with the RNA innovation that is happening not only for COVID, but also for other diseases and cancer research, I think there will be some interesting things happening in the medtech space. Where to find me? In Twitter, here we go, at Mark M. Eberstein.
I think we need
on Twitter. Best way to reach me. And I have direct messages open. I'm looking for pictures, of course, there as well. And let's start the discussion there.
Wonderful. Mark Ragu, Peter, Gary, thank you all. And always a pleasure to host you as well. Thank you to your audience for tuning in. If you like what you heard, please do subscribe and share the article, and make sure to reach out to each of our investors today and the entire VCTV family, who you can hear more from on LATOKEN.com, in the archive, and every day here on VCTV as well. And if you'd like to be on a show like today's, either as an investor, like we had speaking, or as an entrepreneur, like we had sharing in the beginning of today's episode, reach out to the team and or myself. We'll find that right spot for you. And a big thank you to the LATOKEN team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott, and you can find me everywhere online at Kyle Ellicott, along with all social media platforms, as our investors mentioned they are on as well. And please do add context where you heard us, what you want to continue the conversation about, so we can make it effective together. And with that, we'll be back here tomorrow with more VCTV. Also, make sure to continue to follow us, not just here, but also on Clubhouse, as we're jumping in and having some fun conversations about what's happening in the world of blockchain and fintech as well, and many other industries to come. With that, everyone have a wonderful day, and we'll see you back here